Hello friends, Rajesh here. Some of you have asked about life insurance. So today I thought of discussing what is the life insurance all about, what are the various types available, and is it worth considering or insuring yourself for the life insurance. All right, if you're here for the first time, consider subscribing to the channel. Welcome back to Invest and Grow. Let's get started. So, as the terminology insurance suggests, it's applicable across any insurance. So, it is an insurance or the agreement between the insurance company and the policy holder. In this case, the life insurance, the policy holder and the insurance company make an agreement that in event of policy holder's death, the insurance company agrees to pay the lump sum of the insured amount to the beneficiary of the policy holder. In return, the policyholder agrees to pay the premium for the time frame that has been agreed to. So let's say you have a policy of 30 years. The policyholder agrees to pay the premium year on year, and within that 30-year time frame, if there is an issue or death of the policyholder, then the insurance company pays the amount to the policyholder's beneficiary. And is it worth having an insurance? Should we be all insured? It is always based on the individual circumstance. Let's say as a person you have various loans, commitments, kids education, all those things. While everyone works to make out a living, it is always good to protect the risk by ensuring proper coverage in event of any unforeseen circumstances. So the family gets benefited. So it's a basically a risk mitigation tool. And what are the types available if we have to go for an insurance? So whether there are two core types. One is the whole life insurance. The other one is the term insurance. In both the instance, you typically agree to a particular time frame, whether it's a 20 years or a 30 year, and that remains fixed. And also the premium that you agree to pay for the entire tenure of that 30 year remain fixed. So when to actually enroll or go for a life insurance? Earlier the better, because when you're young in age, the premium that you pay would be much less compared to what you would do when you enroll for an insurance in the later time. So earlier the better. And as a rule of thumb, the insurance company will mandate you to go for the medical exam and review all these things, and also look into your financial circumstances and eventually give the approve or deny your application. And it is pretty common that you're going to get one, so that's not a problem. It is all about the premium that you will pay. So earlier the better. As we dealt about these two things, let's look into some of the nuances of the whole and the term insurance. Let's actually look into a sample that was prepared. Okay, so as we dealt, we talked about whole and the term insurance. So what is this whole versus term? So the whole insurance actually covers for the entire life, meaning, so both are basically for the 30 year, in this example, 30 years using as an example, you would pay the premium for 30 years. The whole insurance, what happens is that whole life insurance, it also tells that after 30 years, even after 30 years, even if you didn't have any life risk, there is some amount guaranteed back to you, so that the policy holder gets benefited out of getting some amount of amount back once even after the 30-year time frame. In the term insurance, it's a cut and dry. So you insure for the particular 30 years, and in event of your death or in an event of the unforeseen circumstances, the entire insurance amount for the amount that you insured is going to be given to the beneficiary. So then, while this is the case, what is the big deal? It could be a no-brainer why everyone will go for the whole life insurance. The biggest difference is the whole life insurance has a super high premium. It's literally 5 to 15 times. So let's look into a hypothetical scenario. Right, say you wanted to insure yourself for an 1 million policy. In this example, as you see, the death benefit is 1 million. And in terms of a term insurance, look into the premium. The year-on-year premium, it could be as low as 1200 or 1300 or in the along that lines. And wherein, if you look into the life insurance, the premium would be almost 5 to 15 times. So in this example, I have put like 10 times. So instead of paying 1200 per year, probably you will end up in paying 12,000. So what happens over the time? If for the over the time of 30 years, in this example, 1200 as an example, you would have paid 36,000 as a premium, and assuming that God's case you didn't have any life risk, all you are going to lose is 36,000. And but the biggest peace of mind that you have is that in case of an life risk, you are given, I mean, your beneficiaries are given the 1 million, right? The where on the other hand, you would, in this example, for the same life insurance for the entire whole life, you would have paid like 360,000. This contributes to, literally you would have paid 324,000 as excess premium in comparison to what you would have done the same with the term insurance. So the minor difference or nuance is that the part of the amount is going to get invested in a cash value account. So the only consolation or a solace is that the insurance company is going to give you back part of the amount. So in this example, even if they are going to give you 60% of the amount, you are going to get like 216,000. While this may, on an onset, this may look okay, lucrative, but this is not a great thing, right? Because you invested or you paid as a premium of 360,000, and all you are getting in return a part of the amount. So the wise or the ideal choice is that you go for a term insurance and invest the rest of the excess premium in an investment account. So you really actually, you are not letting your growth potential go in drain. Rather, let's say if you had invested this 360,000 in a total investment account, of course you are not covered for a life risk if you are not going for an insurance product. But imagine you invest the same amount in an investment account, and in this example 300,000, that amount would have grown exponentially over time for this 30 years time frame. So I mean, while it's basically based on the individual circumstances, the ideal or the wise choice would be you go for a term insurance and invest the rest, so you save out the cash. And the reason why people go for the insurance as a whole is that they wanted to cover their risk for the next 30 or whatever the year of their career, right? And by the career, for example, a 40-year guy goes for an insurance and they go for a 30-year. By end of 70-year, their all needs, ideally the assumption is that their all financial needs are met. Beyond 70 years, they do not have any life mandating expenses that they need to pay out. So it is purely viewed as a life risk covering vehicle. So that's all the on a very high level. Hope this sets some context, and while it depends on the individual circumstances, the ideal and wise choice would be going for a term insurance. And as you have seen, as we discussed earlier, both whether you go for a term insurance or the life insurance, both will mandate you in physical medical examination. And another thing to keep in mind is that you need to keep the policy in effect, meaning that you cannot lapse a policy. Moment you are not paying a premium for any single year, your policy is lapsed, then that's gone. That is the case for term insurance. And the similar thing for life insurance. The only consolation in life insurance is that the cash value, you are going to get some amount back, but you do not want to be enrolling in either of this insurance and let the policy to lapse and go the amount in drain. So the fundamental concept is that you ensure that whatever the time frame that you had committed, you pay the premium promptly so that your life risk is covered, and by the way, it serves the purpose. Hopes this helps. If you have comments, thoughts, questions, leave in the comment section. I'll go through and more than happy to take a look. If you like this video, hit the like button and consider subscribing if you haven't done already. Thanks for watching. Bye.